coordination doesn't come any more coordinated than what we saw yesterday out of the UK. Of course, we had the emergency 50 basis point cut and then the budget. Is that going to be enough to stave off a significant downturn in the UK economy? Of course, dealing with Brexit and, of course, growth pretty much sitting right on the flat line.
Well, whether or not it's enough to stave off a serious downturn in the short term, we're not sure. I mean, the reality is the impact of COVID on growth is the restrictions that will be in place if the outbreak continues to spread. And monetary policy and indeed fiscal policy can't really do much about that. Fiscal policy can do something to support people if they are prevented from going to work. It'll give them some cushion financially, but it won't necessarily stave off that short-term downturn. I think what's interesting, though, is that the Chancellor is very clear about providing more support for growth, not just through the COVID outbreak, but more fundamentally for the next couple of years. So we've benchmarked the fiscal stimulus that he announced yesterday, and we think it's about equal in scale to that which was implemented after the great financial crisis. So a very substantial boost to growth over the next year or two.
Is it targeted appropriately? Do you think, we were just running through some of the numbers, £5 to £6 billion in extra funding for the NHS, also this plan to compensate workers as well for up to 14 days. The state will bear the brunt of the cost of workers, of course, being paid while they self-quarantine for 14 days.
Yeah, that's clearly a very appropriate measure, essentially. And, you know, when those on the lowest wages see their wages fall, that essentially directly translates through into consumer spending. And so supporting those on the lower wages should, you know, provide the biggest bang for the Chancellor's buck in terms of supporting growth.
OK, Dan has a question for you.
Hi there, Tom. What we've also seen is the UK Chancellor essentially setting budgets with a widening deficit course for the next 3 years. How do you expect this to filter into some of the metrics that you watch, and in particular domestic GDP right now after we've seen the BOE with this emergency rate cut just yesterday?
Well, I mean, as I was saying, the size of the fiscal stimulus is probably about the same size as was enacted in 2008, 2009. But the UK economy is probably a lot closer to its potential level of output. And so we're looking ahead a year or two and seeing actually that, you know, after the adjustment to COVID has run its course, hopefully, the size of the stimulus will actually push the UK economy into, you know, slightly inflationary territory. And so it should cause some need for the Bank of England further out to start raising rates, possibly into early 2021, which is positive in the sense that, you know, the bank needs to recoup the ammunition that it's unleashed over the last 24 hours and create some additional room to cut for the next downturn.